You're listening to the Bloomberg Businessweek podcast. Catch us live weekday afternoons from 3 to 6 Eastern. Listen on Bloomberg.com, the iHeartRadio app, and the Bloomberg Business App. Or watch us live on YouTube.
Hi, everyone. Welcome to the weekend edition of Bloomberg Businessweek. We were live from the Bloomberg Screen Time event in L.A. this past week.
It's all about the collision of Hollywood and Silicon Valley. We're hearing from entertainment executives, entrepreneurs, and celebrities as they look toward the future of content in a world where it's all about streaming.
It is indeed, Tim. It is also about the moguls, the celebrities, and innovators already defining the next phase of pop culture. And that includes also what's going on when it comes to sports and gaming and the role of artificial intelligence. It's impacting it all.
With that in mind, let's get to some of our favorite conversations from Bloomberg's Screen Time event this week, held at Naya Studios in Los Angeles.
Two of Bloomberg's greatest out west have been here listening to the conversations, and they're joining us right now. Bloomberg News Entertainment editor Chris Palmieri and Bloomberg News Technology executive editor Tom Giles. So great to have you both with us.
Happy screen time to both of you.
Happy screen time. I feel like it's one great conversation after another. Tom, let me start with you. What jumped out for you that you found just really interesting?
You know, it started with a bang. As you know, we had Ari Emanuel. He had strong words about his rivals. He had strong words about Netanyahu. He really came out swinging and got things started. And we're going to be having a conversation with one of the people he criticized later today from CAA, his rival talent agency, right? And so that dialogue will continue.
Right.
And that conversation will continue.
He was actually very specific about some of his criticism. That to me stood out about the people in charge, and then going back to Harvey Weinstein, right? I mean, he was pretty critical. Just came out swinging, had some very strong words, accountability. He wants there to be accountability. Yeah.
But mind you, this is his rival. This is his competitor. It's very much in his interest to raise questions about this. So you have to take it with that. But he also raised questions about some of the female actors who are represented there and asking whether should they be saying more? Should
Meryl
Streep,
Margot Robbie,
name check two of the hottest stars in Hollywood right now.
Yeah.
Should they be saying more? It's a question that he raised. But that's really just the beginning. I just got out of Issa Rae, who was talking about her concerns about AI. And can AI take can they use an artificially created image of an actor like her? She called it horrifying. She compared it to a Black Mirror episode.
Right.
So she really outlined, she really articulated what the concerns of actors like her when they're at the table, at the negotiating table. The strike is, very much in the backdrop of this whole set of conversations. Questions about why is there an impasse? Go ahead.
Well, Chris, come on in, because I know before we got going, you too, Ari Emanuel, really stood out for you. Walk us through that a little bit too.
Look, if I seem excited, it's because I'm not just a hype machine here. I've been to so many of these conferences that are such duds, and I was a little worried, but this
is not a dud.
This has been News Central. I mentioned we do these things 5 takeaways, and we have big events, and we could do 5 takeaways just on Ari alone. He was so strong. Obviously, there was the issue about the Harvey Weinstein and the CAA suit that Tom talked about, but he came off saying right at the beginning that Benjamin Netanyahu, Prime Minister of Israel, should step down after what happened last weekend. Got a lot of coverage all around the world. A very, very heartfelt statement from him, and he gave his reasons why. He did some handicapping on all the big media companies that we follow. He said, I would not be buying Paramount right now. He said Fox has got a really older generation, a lot of family dynasty issues there. But he threw his support behind Warner Brothers CEO David Zaslav and also Bob Iger, a man who's been getting a lot of criticism lately. And by the way, when I was looking at all the coverage he was getting, we even got pickup in the wrestling websites about what he said about.
Well, it makes sense given what he oversees now. Talk a little bit about that and his transition from being the super agent to now being CEO of a company that oversees so many different entertainment assets.
Well, the big news there was that they debuted this big stock. TKO is the ticker symbol, and it's the combination of UFC and the World Wrestling Entertainment, and it's supposed to be this combat sports powerhouse, and it is, but it's kind of tanked recently. And one of the reasons is they had high hopes for the new TV rights. It turns out NBC is not keeping the show that they had, and so. One of the ththings he said is like, look, everything's up for negotiation. There's 6 other bidders that could take it, and we could move the night that the show is on.
Right.
And so got a lot of attention in that community. And then it almost like tease into what's coming later with Brian Lord. They are going to have a little cage match this event. So it's just it's been a lot of news here.
Well, I want to go back to artificial intelligence because we talked to the CEO of Sundance Institute, and she said, for independent filmmakers, technology and AI might be helpful. They've got limited budgets. And so it was just a different way of thinking about all the concerns that we talk about AI. Talk to us a little bit more about, because this is coming up a lot here, Tom.
Well, how can creators, small creators who don't have big budgets behind them, what are the tools that they can use, AI tools, for production, for making their content really stand out? Those are a couple of different ways, like maybe more innocuous, less threatening to the actors. Where it gets scary, again, to come back to the Black Mirror metaphor, it gets scary when you think that someone could artificially create an image and bring people to life, even though they're not not even part of the production.
Right.
All these things might happen without their consent. That's where it gets scary.
Well, that's a perfect segue, Chris, into the backdrop of what's happening with screen time right now. I mean, the writer's strike has been resolved, but the actor's strike certainly hasn't. AI is a hang-up there. Talk to us about what we heard from Ted Sarandos, co-CEO at Netflix. This is a guy who's been at Netflix since almost the beginning.
Yeah, another big news break first, which he gave us a little behind the scenes in the room at what happened and why the talks broke down, which they did after many days. Basically, he said the actors came in with a demand for they originally had wanted a 2% share of the revenue from streaming services. Now he called it a levy, a tax essentially on per customer for every streaming customer. This was in addition to what the studios had already offered, which was bonus payments to actors, as they've already done for the writers, based on how popular a show is. So he described it as a bridge too far. This is, we're very long in the negotiations, and this comes out. This is stuff we've heard. Fran Dresser, the head of the Actors Union, has really been pushing hard. She wants to get some huge win out of this that even the writers haven't gotten. So that was that. That was in the room.
It's a big deal.
Yeah.
It's unbelievable.
He broke other news too. He talked about these experience sites that you've probably seen or heard or even been to a Bridgerton experience.
Yeah.
One of those temporary pop-ups. Netflix is going to open 2 of those. He didn't say where. We're speculating. We will speculate on where that and hopefully break that news. But he said they're going to be opening 2 of these permanent experiential, where there's going to be food, there's going to be ways that you can interact with Netflix content, and they're going to be an ongoing thing. He said it's less like a Disneyland and more like just going to your favorite mall, that you go in and you're going they want people to go in multiple times a month, for example, not just once every other
week. We go do a Squid Games obstacle course and then get killed if we don't reach the end of it?
Hope not.
Why am I
killed in quotes?
Why is my mind going right there? I don't know.
No, there are experiences like that where you can kind of replicate some
Harry Potter. It's almost like
aspects of the Squid Game, not the ones where you die.
You know what's so funny though, to both of you? Years ago, I think Ted Sarandos said we want to become HBO before HBO becomes us, right? Or maybe it was Reed Hastings even saying that. This company is now turning into a legacy company, opening up experiences. Who else does experiences? Every other legacy media company, right?
Yeah.
It's fascinating to see this happen before our very eyes.
Right. Yeah. And look, growth in subscribers is slowing. There's only so much you can. There's only so many more people you can add. But he expressed certainly enthusiasm and optimism that they do have room for growth in terms of revenue, in terms of share. And he's talking a big game.
Just got about 45 seconds left. Favorite moment of the event so far?
Oh, Issa Rae, just coming out of there, so impressive. And yeah.
We'll pull it down.
Hey, we broke the news that BTS, Korean K-pop band, is reuniting for a 10th anniversary. You know, the two of them were in military service. So, hey, we are on top of cultural trends here.
Can you believe BTS has been around for 10 years?
No.
I cannot believe that.
It's like pretty amazing.
Shows how late I learned about them. Just like the little behind the curve,
Well,
I
there's
think.
their anniversary album, so you can
Yeah.
partake in that.
That's true.
Guys, what?
No, and they're just a huge business.
I know.
Huge.
Well, that's what we were talking about earlier. Thank you both. So appreciate it. I know it's been a busy day. Tom Giles, Chris Palmieri, thank you both.
You're listening to a special edition of Bloomberg Business Week featuring some of the conversations from Bloomberg's Screen Time event in Los Angeles this past week.
It's all about the intersection of Hollywood and Silicon Valley, with entertainment executives weighing in on the futures of their businesses.
It's definitely changing. Stay tuned for more conversation straight from Screen Time in Hollywood, right here on Bloomberg Business Week.
You're listening to Bloomberg Business Week. This is Bloomberg.
This is Bloomberg Business Week with Carol Massar and Tim Stenovec from Bloomberg Radio.
This week, Bloomberg Business Week ventured out west to the Bloomberg Screen Time event in Los Angeles.
At the event, a gathering of entertainment executives, entrepreneurs, and celebrities, all talking about some of the greatest transformations in pop culture that the world has ever known.
With that in mind, let's turn back to the event now and enjoy some of our favorite conversations from Naya Studios in Los Angeles.
We have a great guest. If you come out to LA, yes, it's so much about the content business, the studios, and all the good stuff like that. But, you know, it's also known for some iconic sports teams. LA Lakers, LA Dodgers, LA Rams, just to name a few. Sports, too, is such a muse in terms of creating content here in the United States and really globally. And our next guest knows a lot about that. She's part of the LA Rams Inner Circle. She was in an earlier session here at Screen Time. It was called Perfecting Your Partnership Strategy in the World of Sports.
I got to catch a little bit of it.
You did?
It was great. Jennifer Prince, she's Chief Commercial Officer for the LA Rams.
I always feel like all of these, right? They're just such great discussions, and I think about the sports world generally. It is such a great, I'm no joke, it is such a great muse in terms of creating content. How do you think about it? You've got players, you've got teams, you've got lots of stuff going on.
Yeah, so sitting in the center of LA, we have an incredible team, an incredible brand. This brand is global. We have fans everywhere, and we get to play in SoFi Stadium, which is a beautiful mecca of, you know, what sports and entertainment and technology and that intersection is. And so we get to really lean into all of the assets, from the football players to the team to our coach, everything on the field, to then thinking about our brand and the way that we present ourselves and how we work with partners to reach our fans, our future fans, and really creating this intersection.
What's the thing that really moves the needle? That something happens, you post something, you know, and it's just like, it just blows up.
Yeah, so football first, right? Anything football.
From the game or any of it?
Any highlight, any moment, not only on the field, but also the arrivals and the talks with coach after the game, all of it. It all, resonates with fans, and it gives access. And so that access point is really what does well. Our fans, even naysayers, like to hear what coach has to say, whether we win or lose, and how he motivates the team and keeps the team moving. So I would say like the football first.
Silly me, I thought she was going to say Taylor Swift.
So,
well,
how much?
We have to ask.
How can we be? Let's be real. Like, were you guys? Can we have our Taylor Swift moment? Like, was it frustrating a little bit, or like, oh my God, because so much attention, right, has been on, Taylor, or trailer as they call it. So how do you think about that?
Yeah, so really the NFL is having a moment, right? When you think about the fan base and everyone who rallies around football, and then you think about that future fan, and you think of that younger female demo and how to reach them. I mean, this is a moment, and it's not like Travis Kelce needed any help. He will be a Hall of Famer. He's incredible on the field. But the two of them together, it's a phenomenon. It's something that is really impacting ratings, to jersey sales,
Are
to
you
social
guys seeing
media
it?
following.
Are you also seeing an impact as a result?
I think just the overall consumption and who's watching and who's leaning in. We all need to lean into this moment. It isn't happening in our team, right, or within our family, but we still get to capitalize on what it means for this fan base to be so ripe and present at this time, which are young females.
Are you telling a member of the team, like, hey, there's a popular singer that's like... Well, I think
she's not available.
Do you know what I think about the old Hollywood studio system, right? And they would link actors and actresses together just so that their pictures showed up, just to create some momentum. I know. Who's saying, right? Who knows?
We don't know.
Well, it brings up an interesting point about the presence on social media that these players have, even before potentially signing with a pro team. How do you work with the players who have this direct connection to make sure that, look, what they're posting is something that aligns with your own values?
Yeah, so listen, I spent 9 years at Twitter.
We'll get there.
Almost
We'll
2
get
years
there.
ago to come, and so everyone has a personal life. Everyone has a point of view, and those who are notable can use their voice and carry their voice in all the right ways, and also can make some right and left turns. It isn't my job specifically to work with the players and player marketing. That's our CMO. We have teams of people doing that, but we have a really great team. I would say we have incredible players who are not necessarily leaning into things that they shouldn't be, and we like when they're using their voice, that helmet off, who they are as people, going through their journeys, their paths. Everyone has a story, so we like for them to tell their own story, but it's always something just to keep our eye on, but we have those who are well behaved. And
if not, they probably get reminded to be well behaved. Don't we all need that occasionally?
Yes.
Who is it that you like to take meetings with to figure out how do you best kind of leverage your brand?
Yeah, so we have over 100 partners, and we don't just want to create volume and scale around these partnerships. We like to partner in deep, meaningful ways. We like to say we partner with purpose. And so when we're talking to brands, right, the existing brands that we have, from SoFi to Toyota and Pepsi to Verizon, we have so many incredible brands, and usually those want to lean into us who are doing sports marketing, want to reach a future fan base with us and reach our existing fan base in meaningful ways with surprise and delights and offers and access, like I talked about.
What's the read that you're getting from your partners right now on the economy? We love talking to people like you because you see where the money's going. You see how much money is going to certain places.
Or not going.
Exactly. What is the read on the economy that you see from your perch as Chief Commercial Officer?
Yeah, so, we have the benefit of sitting in Los Angeles, and we are working typically with not only heads of marketing, but those in the region who are looking to increase sales, produce outcomes with us. So we like that we are a bridge and a conduit to providing outcomes. So that it's not just the upper funnel fun stuff in terms of marketing with brands. It's also getting down to metrics and measurement. So coming from a world that was highly measured, I ensure that my team has all the right partnerships in place with vendors so that we can provide outcomes. And so when we hear from a brand that they're doing incredibly well with us, we dig into that. What does that mean? We want to make sure that we're marching with our brands to the outcomes.
Is anybody pulling back, though, because of the economic environment?
You know what? There are, I was going to say, so the few categories, right, that are having a harder time is whether it's crypto or some mortgage finance, interest rates, like the things that are present right now that you're more familiar with. Those are the categories who are at times having to either readjust or realign, commit in different ways and at different levels.
All right, you're in an elevator with somebody who really matters, more important than us, and they said, give me 35, 40 seconds on Twitter. You know Twitter, this company. What do you say?
You were there for 8 years. Vice President.
Don't eat up her time.
Content partnerships. What is it?
Eat up time. Listen, I worked at Twitter. We were priding ourselves on being this megaphone to the world and really where public conversation could happen. We did all the right things. I left December of 21 a long time ago. What Twitter is now, it's just taken on to be X. It has a little different meaning, the way that they're leaning into product innovation, and no comment really other than I had incredible years there and miss those that I worked with.
Do you still use it?
I do. I'm not posting as much or tweeting, or it's not tweeting, it's posting.
That's kind of where I am.
And so
I'm
consuming for sport more than I'm talking about myself.
Yeah, it's a different world. Me too. I find myself backing up. What a pleasure. Thank you so much. So enjoyed
Appreciate
it.
you.
Jennifer Prince, she's Chief Commercial Officer for the LA Rams, on site at Bloomberg Screen Time in Los Angeles.
You're listening to a special edition of Bloomberg Business Week, featuring the best of Bloomberg Screen Time event in LA this past week.
We'll have more on the future of content, the boom in streaming, audio and video, and the latest sports and gaming experiences. When we come back, we're covering it all. This is Bloomberg.
This is Bloomberg Business Week with Carol Massar and Tim Stenovec from Bloomberg Radio.
You're listening to a special edition of Bloomberg Business Week featuring some of the best moments from Bloomberg's Screen Time event held in Los Angeles this past week.
More now from some of the moguls, celebrities, and entrepreneurs already defining the next phase of pop culture.
All right, we're going to talk now about the gaming industry, because over the summer, gaming giant Electronic Arts, EA, split into two as part of a restructuring. So they divided the company into EA Sports, EA Games. It really speaks to the growing content worlds and demands of both sports and gaming. There's a lot that they are doing on both fronts.
Yeah, we got a great guest with us this afternoon. Laura Miles, president of entertainment and technology at the $35 billion market cap and gaming giant EA, who also might know it as Electronic Arts. She knows this company well. She was the former COO and Chief Studios Officer of EA as well. She's with us right now. How are you?
I'm great. Hello. Thanks for having me.
Thank you.
What a great event.
What do you get out of something like this?
I love the cross-section of technology, media, and then just the conversations that are happening. So the presentations are awesome, but the richness comes from the, getting a cup of coffee and having interaction and exchange with people. I just did a talk about gaming, and it was great to hear people from nonprofits that are very passionate about education and how gaming can contribute to that. And I don't know if I would have had that. I don't know if I could have organized that or have, planned that conversation. So it's great. It's great to be here.
It's so funny. It's a very Bloomberg-ish kind of thing where we all kind of have to run into each. We don't have to, but we just do. But it's amazing that you're like, oh, I didn't know you were doing that. Maybe
the happy accidents, right? Yeah, it's great.
Happy accidents. Tell us about your world and when you were thinking about. Actually, let's go to the big story. Let's talk about soccer.
Okay.
Can we go there first?
Sure.
In terms of this long-term relationship that you guys have with FIFA, and now you're doing your own thing. Was that a complicated, difficult switch to do?
It's been years in the making, and it was such a great time for us, given shifts that we're seeing in the industry, shifts we're seeing in technology. It was a moment for us to say, hey, gosh, can we really create our own brand? And EA Sports Football Club is the idea and concept of it is such an inclusive idea for players and partnerships we have with clubs. We have 19,000 athletes in the game, and so it's remarkable. And where the industry is headed is you think about games now as platforms, and you have in the case of EA Sports FC, we have a mobile game, we have online game in Asia, we have the HD premium game, and they're all about this big ecosystem. Hundreds of millions of players in this, and they play multiple versions of the game, and they socially connect and they create together and they watch games together. And so that's really the future and what we're seeing in the industry. And when we think about Electronic Arts, we also have Battlefield and The Sims and Apex and Skate. And so you apply this model of this connected ecosystem, these massive online communities. We see that that's a really important direction for our growth and where we're headed.
But this game, FIFA is legendary. One of the best-selling series in the world, more than 375 million copies sold, versions in 20 different languages. And for people who are just catching up, and there's a great article in this week's edition of Bloomberg Business Week, EA and FIFA were not able to come to a licensing agreement. So this year, it's not called FIFA anymore. It's called EA Sports FC 24. How do you make sure that consumers of the game, people who are new to it as well, know that this is the next iteration of what last year was called FIFA?
Are they already?
Well, we launched EA Sports FC 24 a few weeks ago, and we are so thrilled with the reception of the game. And keep in mind, the game is everything that it was. Again, we have 19,000 athletes, over 300 clubs and partnerships. So when players in Liverpool show up, their club is there, their athletes are there, and that's what's really meaningful to them. That was super important that we maintain that integrity of the experience. And so, and we were also able to innovate in the game with some really great technology and really realistic soccer experiences and animation. And
it's amazing when you guys get so specific on details in
Yes.
terms of whether it's how their shorts move. Like I know our story in Bloomberg Businessweek talks about it, but it does say something about the attention to detail so that when somebody is playing, it's like being at a real...
it's about realism,
Right.
and having that expression. And I am a soccer player on the pitch, and so I think that's what players really look for. So yeah, we're really proud of where it's landed, how the game is received by players right now, and where we're headed. That's the exciting thing. Again, these connected communities are massive.
So what do you do with that? Because, when we talk about connected communities, I think we go to the traditional social world, right? And we think about those communities, better or worse.
Mm-hmm.
Tell us about that community and what's the power of it and where else you can go with it.
Mm-hmm. The idea about play, clearly games are about play, competing and playing games, right? And as we continue to think about our design and our innovation, we really want to extend the modality of experiences for players. So creation in games is also significant right now, really big. Creating your own objects, creating your own modes so your friends can come play. And then the next modality is watching that. And so people can record and create short form videos and then broadcast that. And then to your point, the social connection around all of that is what is really meaningful. And that's the flywheel multiplier effect of engagement. We have people spend billions of hours in our games every year. It's remarkable how much time people spend with us. We'll launch a game and they can come back and play it every day over a whole course of a year. We used to launch 20, 30 games a year. We launch maybe 7 or 8 now, but we launch 400 to 500 live service updates a year. And so we're there for players with events and seasons and content and just keeping the game alive. And to your question about social engagement, having those components, having those events, and having those shared experiences is super important for the social engagement.
To keep going back.
Yes,
and
exactly.
Say, okay, now what's new or what's going on?
Where's the growth happening for EA right now? Is it with the same people buying more games, playing these games more, or are you successfully bringing more people into gaming?
It's both, I would say. So first, really meeting the Gen Z, Gen Alpha motivation and need through creation, through self-expression, through sharing content, and then that social connection around. That's super important for us to hit that key motivation of that generation of those players. And then I would say that players as well spending more time in our games is also another area of growth for us. So we look at, continue to expand our TAM, having, bringing new players into experiences, whether it be through new gameplay modes, new brands, new franchises. Apex has been a huge success for us, and that's been a great game for younger players. And then just having more content for players. Our Sims game, Sims 4 right now, is about 10 years old. And we continue to put out content. People just continue to spend even more and more time. So new players, larger addressable markets, and then just more time in the games are really critical.
All right, this may be a little weird, but, coming off a Barbie.
Go there.
And I know that's been a big conversation here, but I do think, folks are saying, nobody would have thought, they've talked about a Barbie movie forever. It finally happened, and it was a really huge success. And so I think anybody who owns any kind of toy property is like rethinking. So how do you guys think about, okay, now where's another avenue that could be a great content creator for gaming? Where do you go? What do you look for? What kind of trending or, innovators or TikTokers? Who is it or what is it that you look at?
Well, the beautiful thing about where we are right now as an industry is that as we look to our players, this idea about creative self-expression and creating sandboxes and tools and frameworks for them to create experiences, I think it's been phenomenal to see what people create and how they engage with our tools and our worlds. And so we've been inspired by...
You could just keep kind of playing that out.
Yes, completely. We're super inspired by how people think about things and, in ways that are very unexpected and how they engage and interact in our world.
Can you just dig a little bit into that? Because the Bloomberg story in the magazine kind of gets into that, like just creating, whether it's face or the shorts moving like you would expect it to do. Can take a long time, right?
Yes.
With coders and so on and so forth, like to figure
the iterations of it, yes, and game engines. And AI is going to play a pretty meaningful role for us in content creation.
How so?
The way that we're looking at it, so AI has always been part of our company. If you go back even 1988, Madden had 22 players on, little AI players on the field. So we are an AI native entertainment company and always have been. And we're looking at AI in a way of optimizing what we currently have. So we know that AI can optimize tools and workflows for our developers and so our players as well as they're creating things. And then also AI is going to help us expand content. So we talked about there are 3.4 billion players in the world. On average, they spend 4 to 5 hours a week with us. And so you could have all developers in the planet and not develop all the content and meet all the demand that exists. And so AI, I think, is going to play a meaningful role to help our creators expand content and creation. And then, of course, it can be very transformational.
Laura, so appreciate it. Yes. Laura Miele, she is president of entertainment and technology, of course, at Electronic Arts, joining us here on Bloomberg Business Week. I'm Carol Massar, along with Tim Stenovec.
You're listening to a special edition of Bloomberg Business Week featuring some of the conversations from Bloomberg's Screen Time event in Los Angeles this past week.
It's all about the intersection of Hollywood and Silicon Valley, with entertainment executives weighing in on the futures of their businesses.
It's definitely changing. Stay tuned for more conversation straight from Screen Time in Hollywood, right here on Bloomberg Business Week.
You're listening to Bloomberg Business Week. This is Bloomberg.
You're listening to Bloomberg Business Week with Carol Massar and Tim Stenovec from Bloomberg Radio.
More now from Bloomberg's Screen Time event held in Los Angeles this past week. Tim and I were there broadcasting our daily simulcast from the Naya Theater in Los Angeles.
That's where we had a front row seat to the collision of Hollywood and Silicon Valley.
Going viral can be good or it can be bad.
I feel like it's more often bad than good.
Well, anyway, a discussion here at Screen Time was kind of all about this. It was entitled Viral Lessons, and it included top creators of social content. We have one of them with us. Drew Afwalo is TikTok creator and host of the comment section. Welcome, and thank you for joining us.
Thank you so much for having me. I'm excited to be here.
We are excited to have you here. And it is, right, viral. It can be such a great thing, and then it can be rough. How do you ever think about when you're doing something like, all right, I'm going to get a lot of crap for this?
I mean, yeah, for my niche in particular, absolutely.
You get a lot of feedback.
Yeah,
feedback is one way to put it.
Yeah, feedback is definitely one way to put it. I built my business off the shoulders of men who hate me, so I'd call that a win for women of color. I think it's been a real consistent barrage of hate for so long now that I think it's just white noise to me, specifically from misogynistic people in general. But
when you started, what did you think about what you wanted to do?
I mean, when I first originally started, I just started telling silly stories that made me laugh and made me giggle. And so some people started kind of relating to it, and then I had one video that really took off, and then it kind of just snowballed into this crusade, which I'm happy to carry out. And I have been for a long time now. But yeah, it was never anything I thought was going to happen, although now I'm glad it has.
But when you carry it out, I mean, it's not without its own challenges. You've been blocked, you've been banned, your account has been shut down.
Absolutely.
How do you get past those things?
I mean, I think I just, even when I lost my TikTok account 4 times, I got locked out of it. And it was when I was on a real growth spurt. I was growing 100,000 followers every other day. And so I got banned twice first, then I got signed, then I got banned 2 more times.
Why did that happen?
Mass reporting, which is an issue that I've talked to TikTok about too, which helps. It helps to have, a team. I think me getting a team really helped in that sense.
Do you have a direct line to TikTok now?
I have a rep. I think most creators do who are verified. They have some sort of contact person that they can reach out to if they have any issues at all. And once I got my contact person, I think it really kind of helped. Also getting verified helps too. It helps legitimize you in the eyes of the app and also
Drew,
the algorithm.
We're in this era of trying to figure out so much social media out there, and there's misinformation, there's really problematic information, there's dangerous information, and then there's opinion and entertainment. Mm-hmm. What do you think is the fine line here?
I mean, I think for my particular niche, there is really no other side. You see bigotry platformed openly and publicly, so I respond to it accordingly. I don't give them a chance to defend themselves because I don't really want to hear why you feel so bigoted and felt it was funny to platform it and perpetuate and uphold all these different forms of oppression. I don't need to hear the other side because I've seen it for myself. So I feel like for my content in particular, I like to describe mine as it's a real one-way street on my platform. I see what you say. I don't give you a chance to defend yourself. I make fun of you publicly, and since we're all joking, let's all laugh together.
Just 30 seconds when you think about working with a brand, what's got to be top of mind? Is it about the financial composition of it, or is it also who they are? Just really quickly.
I mean, I think finances play a huge role for sure. Obviously, I'm a business, and I have to remember that we're a business. But at the same time, I think as long as their ethos matches mine and they understand my platform and agree with it and feel empowered by it or feel like it needs to be spread even larger, I think that's really all I focus on.
Drew Afwalo, a TikTok creator, of course, and content creator, I should say, and host of the comment section, joining us here at Bloomberg Screen Time. You're listening to a special edition of Bloomberg Businessweek featuring some of the conversations from Bloomberg's Screen Time event in Los Angeles this past week.
It's all about the intersection of Hollywood and Silicon Valley, with entertainment executives weighing in on the futures of their businesses.
Stay with us. Today's top stories and global business headlines are coming up right now.
You're listening to the Bloomberg Businessweek podcast. Catch us live weekday afternoons from 3 to 6 Eastern on Bloomberg Radio, the Bloomberg Business App, and YouTube. You can also listen live on Amazon Alexa from our flagship New York station. Just say, Alexa, play Bloomberg 1130.
Hi, everyone. Welcome to the weekend edition of Bloomberg Business Week. We were live from the Bloomberg Screen Time event in LA this past week.
It's all about the collision of Hollywood and Silicon Valley. We're hearing from entertainment executives, entrepreneurs, and celebrities as they look toward the future of content in a world where it's all about streaming.
It is indeed, Tim. It is also about the moguls, the celebrities, and innovators already defining the next phase of pop culture. And that includes also what's going on when it comes to sports and gaming and the role of artificial intelligence. It's impacting it all. Along those lines, let's get to someone who helped build Netflix into what it is today.
We're talking about Netflix co-CEO Ted Sarandos, who talked with Lucas Shaw, Bloomberg News managing editor for media and entertainment, at Naya Studios in Los Angeles.
You know, one of the themes of this event, one of the big things happening in the industry, obviously, is we're in sort of a ceaseless moment of kind of tumult and change. A lot of people, or a lot of that comes from companies like YouTube. And we've reached this point where it's clear that sort of streaming has won, right? Or at least it is slowly replacing television as the dominant way that people watch.
I mean, ultimately, consumers decide what wins, right? And I think they're saying loud and clear that they like the control and the choice of streaming.
But there remains a pretty healthy amount of skepticism as to streaming as a business. Now, you guys are profitable. Some people would say, and we can debate this, that you are less profitable than the most profitable TV networks were. Pretty much every other media company that is trying to compete with you is losing money trying to do that. So give me the case for why you think streaming is already a good business and will only get better going forward.
Yeah, look, I think it's a great business, and I think it's in its infancy. We've been streaming for, in some form for about 16 years. And our original content initiative, we just passed our 10th anniversary of our first original show. So if you think about it in that way, and you think about the network business that's been at it for 75 plus years, and before that, most of those were radio networks. So they've been at this for a very long time. And I think that ultimately these consumer-driven things cause businesses to react and reshuffle. And I'd say consumer-driven because now we didn't just put something on there and say, now this is how you have to watch. When we started doing this, streaming actually, I would say, saved this industry. Because where we were heading at that time, remember when we started this business of streaming, we started licensing content from the networks. And at the time that we were licensing, we could only get what was available, which was nothing. So we were licensing from the bottom of the barrel, things that had no revenue for anybody. Shows that didn't get to syndication, things that weren't otherwise sold.
Kind of like what Tubi and some of the AVOD services did when they came around, where they started.
And we gave it away with the DVD business. And it was, you got what you paid for back then. But I'd say what happened was that's created a whole new revenue stream for the networks and the studios. It created a whole new residual revenue stream for actors and performers who performed in those projects that were sitting on the shelf. And really kind of got the ball rolling in a way that, obviously I think these things can take decades to build, but with their big, meaningful businesses, that's a good investment. And I'd say good business for us. It's $32 billion of revenue and $6 billion of profit, and we've been growing the business pretty dramatically and pretty quick. We grew pretty quickly. We're not growing as fast right now as we want to, but we are still growing the business.
So I'm curious on that point, because you guys in your remarks, I think your last earnings report talked about how you still aren't growing as quickly as you'd like to. There was a point in time where every year, like clockwork, Netflix would basically add 25 million to 30 million customers.
Yeah.
That obviously post-pandemic has come way down.
Yeah.
What are you doing about that? And do you think you can get back to the level of growth you were at 3-4 years ago?
Look, I think the key to it is growing growing revenue, and I think for us that's a combination of putting a great product on the board. When you talk about is streaming a good business, it is if you do it well. And I think I would say the team at Netflix, in terms of the programming, Bella Bajari and her team are phenomenal at focusing on what people love, and their creative team is great at delivering for what people love. The team that delivers the UI experience. Remember, something that happens at Netflix that's almost impossible anywhere else, and I'd say because of our distribution footprint and our recommendations, that you have the ability, if you're telling a story from Korea, to be the biggest television show in the world. That can only happen on Netflix. It's not just taking obscurity and making it big. Imagine somebody as big as David Beckham, who releases his documentary on Netflix and in days grows his social media following by 500,000 people. And I think this happens over and over again with the combination of our distribution footprint and recommendation, and which I think is what distinguishes the business. And the way you grow it is by keep doing that better and better. And the opportunity to grow it is enormous. We're about 10% of screen time when people are watching on their TV at home, about 10% in our most penetrated markets like the US. Around the world, we're significantly smaller. We're about 5% of consumer spending in the businesses that we're in, which is paid television, advertising-supported television, and games. And so as you look at that, and we're just in our infancy in those businesses, and about 5% of consumer spending. So we have a ton of room to grow revenue from here. And I'd say that we're pretty underpriced based on those kind of statistics of 10% of screen time and 5% of revenue. So I think that there's plenty of room to grow as long as we're have a high level of satisfaction with the product. The consumers, it's a one button easy cancel service. So if you're not loving the new season of The Crown when it comes out in November, you jump. So we know we have a constant feedback circle with our feedback loop with our members, that if we're not pleasing them, they jump.
Yeah. So you said underpriced. When is the next Netflix price increase coming?
Nothing to announce, but our pricing philosophy has not changed, which is we have to add more value to the consumer, and then we come back and ask them to pay a little bit more for it if they agree. So it's been a successful formula.
Have you done, on that point, what does your research tell you about sort of the upper limit of what people would pay before they start to really question the value of Netflix?
We really don't spend that much time on trying to figure out how much we'll get you to pay, because I think it's a fluid thing. So basically, if you're delivering, you have to continue to deliver. So it's all in the hypothetical. So what I don't want to do is come in at a period of great strength and someone say, "Oh, I'll pay anything because I'm in the middle of the new season of Stranger Things," and then we have to come back. But we do it every week. So a lot of these services and a lot of that are out there, they get a couple of hours of engagement a month. We get a couple of hours engagement a day, and that to me is like there's all this mystery around what is success in streaming. It's engagement. It is how much time do people spend on the service, because that tells you how much they'll pay and how long they'll stick around.
Okay, so I'm curious. You mentioned the success, which has been a subject of a lot of discussion over the years with regard to with you guys and streaming more broadly, as it feels like people have less visibility into what works and aren't really sure what you guys think matters.
Yeah.
What are the metrics for Netflix that are most important when evaluating a show or a movie?
Yeah, you guys take us to task a lot on this transparency issue. I would say, look, definitely relative to peers, we're incredibly transparent. And we're completely transparent with our producers, so they know exactly the viewing data. And then we're going through things like the top 10 and through things like we publish the viewing hours of the top shows. And we're definitely heading towards a much more transparent time in the business. The streaming itself is not that exotic anymore. And every other segment of the business does have Nielsen ratings or box office reports or the New York Times bestseller list, all those things. So we're heading towards that for sure. to a time we'll be fully transparent on viewing data.
Does that mean it's... sorry, go ahead.
So that will demystify this for a lot of people, which is basically what I can care about the most is relative to what it costs to put on the air, are people watching? And when they push play, do they stay? So if they push play and then drop out in the second or third season or third
which is completion rate for...
Yeah. So those things all matter, but they all add up to the same thing, which is engagement. So I think all the data is really there. You might have to triangulate it a little bit to get to it, but all the data is really there.
What was the toughest cancellation decision you've had recently?
They're all tough. The reason why, because I think that people have got a real fandom. They really love these. Some people really love all these shows, even if the rest of the world doesn't agree with them. So for them, that's why you see sometimes these very obscure shows, and you hear very loud campaigns about stop the cancellations, because they have such an intense relationship with it. That's why I love this business so much. I relate to it. Sometimes my personal taste is really far outside of the norm, and what I've been decent at over the years, and pick people who are good at doing this. But when I look at it, I think it's if I was programming to my taste, we'd be very small. But if we're trying to program to the world's taste. But they're all hard. They really are all difficult decisions to make because people love these shows so much, and there's some things are just a puzzle. You scratch your head, but relative to what it costs to put on the air, did we pick a good show? Did we execute on it well? And did we pay the right price to make it?
That was Netflix co-CEO Ted Sarandos. You're listening to a special edition of Bloomberg Businessweek, featuring the best of Bloomberg Screen Time event in LA this past week.
We'll have more on the future of content, the boom in streaming, audio and video, and the latest sports and gaming experiences. Coming up, the head of the world's most popular video site. This is Bloomberg.
This is Bloomberg Businessweek with Carol Massar and Tim Stenovec from Bloomberg Radio.
We continue our coverage from the Bloomberg Screen Time event held in LA this past week. And I bet if you check out YouTube, you might just find some videos from the event there as well.
YouTube is the world's most popular video site, most popular podcasting platform, most popular music service, and of course, a growing haven for gamers.
For more on how they do it and hope to keep doing so, Bloomberg News managing editor of media and entertainment, Lucas Shaw, he is back with a conversation with Neil Mohan, YouTube CEO.
I want to start with sports.
Sorry about your Dodgers, by the way.
Thank you for that. Well, I'm going to get back at you. So how did you feel about the Lakers beating the Warriors in the playoffs?
Let's go. Back and forth here.
NFL. YouTube made a very big deal with the NFL to carry Sunday Ticket, among other things, paying, I think, more than $2 billion a year if reports are to be believed.
Don't believe everything you read.
How's that going? How are you feeling about the partnership? How are you feeling about how Sunday Ticket's doing?
Yeah, I mean, look, it's very early on. We're a few weeks into the season, but I feel really, really good. I feel that the first and foremost, my priorities literally from the day that we signed the deal was on the user experience, our fan experience on YouTube, joint fans of the NFL and YouTube. We have millions and millions of sports fans on the platform, and the whole point of Sunday Ticket was to super serve those fans. And so everything from what gets all the headlines, which is multi-view and kind of 4 games at once and what have you, to latency, to the clarity of the picture, and then all the features and things like that we have, that users of YouTube TV have known and loved on Sunday Ticket. And so really, really focusing on that. And that has gone, knock wood, really, really well from all the feedback that we've seen. So I feel great about the product that we put out there.
You like the multi-view?
I use the multi-view every week myself. I like the multi-view, especially the one with Red Zone in one of the windows for me, and that's like, as a huge sports fan, like that is like kind of like the perfect Nirvana experience for me.
Yeah. How many people are paying for this thing already?
We don't break out that number but I'm happy with the adoption of the product. We have, there's obviously lots of fans that are diehard NFL fans. But the whole point of this also, in addition to this kind of, what we hope to be an incredible product experience, is also consumer choice. Meaning that with a couple of taps on your phone, you can now sign up for this incredible, premium service from the NFL on YouTube TV, but also on YouTube, importantly, through primetime channels. So that consumer choice has been a really important part of this experience as well. Now, within seconds, you can be up and running. You don't have to wait for a guy to come and install, a dish on your house and the like.
Now, I'm curious, when your deal with the NFL was first announced, I admit I was surprised because I had written all about you guys funding original programming and then not funding original programming, and it just seemed like the Google, Alphabet, YouTube DNA was, we want to be this platform that doesn't pay for things, pick winners, we're sort of neutral. And you're also a company that makes almost all of its money from advertising. Sunday Ticket is a paid service for the most part. What was the strategy behind where it fits into the broader YouTube and Google strategy?
Yeah, so there's two parts to your, two premises to your question there. The first is we are ultimately about what we all as viewers want from YouTube. So in terms of whether the content is paid for or not, doesn't change what the user experiences in terms of what's recommended in our algorithms, what shows up when you open up the app in the home feed, what's recommended to you after you watch a video. That takes into account your personal preferences, and that's the North Star, just to be very clear about that. But in a strategic sense, really, it was as simple as the fact that we have, we're one of the largest sports platforms out there if you think about YouTube. Everything from our YouTube creators that are focused on sports, creators like Destroying and many, many others, to the consumption of highlights from all of these leagues for many, many years, including in-game highlights in many cases, to live sports. We've carried live sports on our platform before. Paulistão, for example, the soccer league in Brazil, various live soccer events throughout Europe. And so we have had that as part of our DNA overall. And Sunday Ticket really just fits into that story. And the second premise to your question, I would also argue, Lucas, that yes, we are an ad-supported business. That is our primary means of monetization on behalf of our creators and partners on our platform. But we are also a subscription business. And YouTube TV is a meaningful part of our business. YouTube Premium, of course, is a meaningful part of our business. And so Sunday Ticket fits into that category as well. We have I like to think of it as twin engines of our revenue growth. We have obviously an AVOD business, but we also now have a meaningful SVOD business. And we want to continue to invest in both because my belief is those two things reinforce each other.
You talked about being a platform for sports and having different rights. As I unfairly mentioned at the top, you're a big NBA fan. Those rights are coming up. Are you interested?
So what I will say is we're taking it one step at a time. Right now, the NFL Sunday Ticket is a big area of focus for us. And again, as I said, getting that viewer experience right, making that game day experience on Sunday flawless and seamless. And you should expect from us a lot more innovation there in terms of products, in terms of creator integrations, all the things that our fans, especially younger fans of the NFL on YouTube, expect. You should see more of that through the season and in the many seasons to come. So that's the focus. Regarding the NBA, they have been longtime partners. They operate one of the largest channels on our platform. My 15-year-old is a huge sports fan just like me. He watches a lot of NBA highlights, and he watches them on YouTube through the lens and the analysis of a lot of his favorite creators. And so we have a long partnership with them, but in terms of our focus right now, it's about this NFL experience.
So not no, but not yes. When I talked to a lot of people before this, asking them what I should ask you, I'd say the number one question I got by far was, please ask about shorts. We hate shorts. You guys have put a lot of resources into YouTube Shorts over the last couple of years. You have released a lot of numbers about how great you think it's doing, but a lot of your longer-term creators are upset because they feel like it's sort of the platform's trying to force everyone into something that they don't want to do. I know you've been asked this a million times, but I'm just curious, what do you say to those creators who are upset about it as to why you care so much about shorts and why you think it's a good fit for YouTube?
That choice is up to our creators. I mean, we have been very clear from the early days, from the launch of shorts now 3 years ago, that ultimately that's a creator-driven decision. Nobody knows their audience better on our platform than our creators and the means by which they want to engage with that audience, first and foremost. Now, having said that, I think that there's two things that are important here. One is viewer expectations. Viewers increasingly, especially when they come to YouTube, have an expectation of all forms of video, truly multi-format. And it's not just about sort of what we call sort of traditional VOD or traditional long form on YouTube today, but it's everything from, those 15-minute VODs to 15-hour live streams to 15 second shorts to podcasts to music. And so all of those our viewers, and they show it both in terms of their feedback, but also in the data, expect that on YouTube. Shorts today is 70 billion views a day. That number's up from 50 billion in January. So the viewers are voting with their behavior.
That was YouTube CEO Neil Mohan with Bloomberg's Lucas Shaw. You're listening to a special edition of Bloomberg Businessweek featuring the best of Bloomberg Screen Time event in LA this past week.
We'll have more on the future of content, the boom in streaming, audio and video, and the latest sports and gaming experiences. When we come back, we're covering it all. This is Bloomberg.
This is Bloomberg Businessweek with Carol Massar and Tim Stenovec from Bloomberg Radio.
You're listening to a special edition of Bloomberg Businessweek featuring some of the best moments from Bloomberg's Screen Time event held in Los Angeles this past week.
Atop the list, Hollywood mega agent turned top exec Ari Emanuel. He's CEO of Endeavor and TKO. And he sat down with Bloomberg News managing editor for media and entertainment, Lucas Shaw. They talked all about Endeavor's combat sports portfolio and its place in the entertainment industry. Check out some of Lucas's conversation.
You closed your deal for WWE a few weeks ago now. It's business you know well. You worked with them as an agent. Why did you want to buy it? And what is the opportunity that you see to grow a business that's been around for 4+ decades now?
Well, listen, I think it's kind of UFC 2.0. We took that business from, great owners in Las Vegas doing about $150 million in EBITDA, and we've increased the EBITDA by a significant amount of money. Vince and Dana's done an unbelievable job, continues to do an unbelievable job in that business. Vince has been decades and decades running this business. And I think our flywheel, whether it be international rights, domestic rights, sponsorship, site fees, all the stuff that we do, and the cost savings that we can bring into it because of our organization, I thought that there was a lot of upside of what we could create, in addition to what we do on the domestic side and the rights deals. And also for the street, I think our Endeavor story was a little confusing. We were not getting, I don't think any CEO believes that they're getting proper credit for the economic value that they create. And so this would be a pure play in sports, combat sports, and then the rest of Endeavor. And then we could go, we tried to do the following to everybody. One, our cash flow conversion, that's what the street was asking. I think we did a pretty good job there. By doing this deal, we've reduced our debt below 3 times. It's a pure play. I think people can understand it now. I don't think they're understanding.
Well, I was going to ask.
Exactly.
So you brought up UFC earlier, and one of the things that happened.
And I'm a genius, aren't I? Yeah.
One of the things that happened with UFC is you bought it. Everyone said you overpaid, which has been a recurring theme for you. You buy something, people say you overpay, you prove them wrong. With UFC, though, I assume you had a feeling, and you were right, that you could go and get a much bigger media deal because they're right. Yeah. Now, there was a point in time at which it looked pretty hairy. I, in fact, wrote a story that Christian, who worked with you, didn't speak to me for like 2 years after I wrote it because it was about the challenges you guys were having in getting a deal. But you did get a deal with Disney. The street, so far, to your point, doesn't love the deal that you already did for WWE.
You mean the NBC deal?
The NBC deal.
For SmackDown.
Because so for those that don't know, WWE has 2 sets of rights, well, 3, but 2 TV sets of rights. There's SmackDown and Raw. And NBC, which had what was seen as the more premium package, paid for the less premium package. You got a 40% increase or so. Yeah. It seemed like people both expected that to be more and or were worried that because NBC had sort of traded down, that you were going to be in a tough spot with.
Okay, so let me answer the question. Okay, which you've nailed it. Here's what I would say. Again, they're wrong, but we got a 40% increase for SmackDown. We have Raw, which is the #1 package, available. There's 3 rights coming available to market. 3 big rights. WWE Raw,
NBA,
UFC, NBA. Okay? We are involved in 2 of them, right? There's 6 buyers. Plus, I would say WWE Network, which is up in 26. I think I'm saying that, maybe 25, 26. So, you cannot undervalue the WWE and UFC for the following reasons. One, we do not have a season. One of the biggest issues that will happen with SVODs and networks is churn. We're 52 weeks a year, right? And we're flexible. You want us Thursday night, you want us Tuesday night. I don't have any of those scheduling issues. And that churn issue, because we're the full year, is so much different from any other sport, because then people churn out. That's one of the issues with sports. Not in a bad way, but that's
what... They sign up for the NFL
and then the package is over, and then you leave. We do not have... Our fans are loyal, they stick around, and they stay with... and they move.
Do you think that the NBA deal has to get resolved before?
No. So I would say to you, there's plenty of interest with Raw right now. I know people really, NBC is out of the mix, and that's why it went down. I think there's 3 things that happen. One, the reason the stock is down is, one, they thought Raw was the best package. I thought a 40% increase, which was in line with expectation, was good. 2, the PFL situation. And 3, probably Vince in our deal wanted to be able to put at any point in time his stock. He's 78 years old. He's been working at this for decades and decades. So I think those 3 back-to-back issues.
For those that don't know the PFL situation.
So the Saudis invested in this, actually, a sport that we said, fine, put it on ESPN. That's on ESPN with us, with the UFC, called the PFL. They put $100 million in. The WWE makes over $100 million from the Saudis for a 5-year deal for 2 events. It came from the group that does events in Saudi. People were thinking it was the next live. We're doing an event with the UFC in Saudi, right? And they said that there's no exclusivity, which is an indication that was for events. We're bringing them an event. And so I think that will calm some nerves. And so we now have 2 big things to go out to market with, like I was and Mark Shapiro was with the UFC. We're pretty calm right now about our rights. We think we have a great situation. We have an unbelievable relationship with Bob Iger and ESPN and Jimmy and everybody there. And Raw's the ratings are through the roof, SmackDown through the roof, our ratings are through the roof, our events are sold out. So we feel really good.
I want to get back to rights in a second, but since Saudi Arabia came up, I'm curious. Rewind 5 years, or maybe less than that. After Jamal Khashoggi gets murdered, you say you give back money, or that Saudi Arabia is going to invest in your company. You now are in business with them in a couple of ways, right?
Yeah.
What has changed between then?
I would say, we didn't want them. I didn't want them at the time we weren't public, in our investor stack, okay? I said on many podcasts about my feelings about the situation and how I think they have hired us to distribute. And I didn't say that we would never do business in Saudi. I just didn't want them in the financial stack of our investors. We distribute their now soccer league through IMG because of the WWE. We were in business with them for at least 5 years. 2 events a year, great. They just bought an event from us for the UFC. Great price, we're doing the event. Will be an unbelievable card. So I just at the time didn't feel comfortable for many reasons, which has been stated. But we're in business with them now. So that's simple.
And my colleagues and I reported recently that your company has expressed some interest, you brought up Liv, some interest in maybe investing in the PGA Tour. Saudi Arabia is obviously supposed to be part of, you're smiling at me.
No, you're reported, you're an unbelievable journalist. We like, I think it's like 7 other bidders. We put in a bid for the, there's a 501c3 nonprofit, and then they've created a profit investment opportunity for the PGA. We are in TKO, the sports business. I'm an avid golfer. Anybody wants? I'm a 7 handicap. And it's one of the great sports. I love it. I think we could add to it what we've added to all of our sports based on the flywheel.
Do you have a sense of whether that would be in addition to the Saudi money coming in or instead of?
We put in our bid.
Yeah. For what?
For the PGA deal.
Okay. For a piece of the tour or for the whole thing?
For the PGA. Yeah.
A piece or whole?
You can't buy the majority.
Okay, thank you.
So, I would love to.
That was Endeavor CEO Ari Emanuel with Bloomberg's Lucas Shaw.
Still to come on Bloomberg Businessweek from our Screen Time event this past week, the matriarch of the first family of reality TV on building a brand in the age of social media.
We'll hear from Kris Jenner of the ubiquitous Kardashian family on fame and the family business. That's when we return. This is Bloomberg.
You're listening to Bloomberg Businessweek with Carol Massar and Tim Stenovec from Bloomberg Radio.
More now from Bloomberg's Screen Time event held in Los Angeles this past week. Tim and I were there broadcasting our daily simulcast from the Naya Theater in Los Angeles.
That's where we had a front row seat to the collision of Hollywood and Silicon Valley.
Well, most social media celebrities last just a few minutes or maybe a few years
That's
if they're lucky, right?
Yeah.
The Kardashians have successfully turned their fame into a multi-billion-dollar business in, I don't know, how many years are they already and counting?
Yeah, I mean, it's been quite a few, and I expect a few more. At Bloomberg Screen Time in LA this past week, Bloomberg's Caroline Hyde sat down with matriarch Kris Jenner to talk about the family business.
You have built a powerful set of not one, not two, more than 20 companies that you're involved in through your family. Ultimately, you have kept your family close at all stages. We brought you here because it says branding and business maven, but more than that. How much was your connection with a consumer, with an audience, with people and their hearts brought ultimately from your early days in your childhood? You had sort of retail in your bones, the consumer in your bones.
Well, I started working in my grandmother's store when I was about 10 years old. So the DNA, if you will, that I had sort of in me at a very young age, I grew up just a real people pleaser. And I wanted everybody to be happy and be proud of me. And when you start working at a young age, I was in charge. My grandmother had a candle store, and I was in charge of the gift wrapping station. So I had a big job. And I was working all summer when my friends were at the beach.
Yeah.
I was at the store. And I think over the years of doing that and graduating to the cash register and, interacting with the customers and then, building my little retail entrepreneurial life when I was young and I was a teenager and working in retail stores, I think you do learn a certain amount of finesse with your audience, your customer, talking to people and convincing somebody how to buy something.
Yeah.
Your paycheck sometimes, it involves how many sales you made that month if you're on a commission. And then it kind of developed a little bit of my competitive spirit.
Yeah.
Because I wanted to win and make everybody proud of my family, proud of me, my grandmother proud of me, my mom proud of me. So, and just the inspiration of watching these women get up every single day and go to work. That was just our way of life. And in my family, we all worked. And that was just how it was done. And so I didn't really know any different.
And so there's work ethic there. Then came the power of persuasion, then came the network that you built. What do you think the skill sets have been that you've really lent upon, and who did you build them from?
The network of people that I think I've been around. I think I was around so many powerful people my entire life. From the time I got married to Robert Kardashian and had a whole, ecosystem of businessmen and entrepreneurs and people running studios. And, any given day it would be the head of a studio and, just often paid attention without really realizing I was paying attention. And I had a very amazing education. I was a housewife. I was raising 4 kids at home. I had the most blessed situation, but at the same time surrounded by these business situations that I didn't even realize were happening right in front of me, but I must have been absorbing it.
That was Kris Jenner with Bloomberg's Caroline Hyde from the Bloomberg Screen Time event held this past week in LA.
And that wraps up this special weekend edition of Bloomberg Business Week. We were at Bloomberg Screen Time held in LA this past week. Check out more great conversations from the event. Find that at BloombergLive.com. Thank you so much for joining us.
And be sure to tune into Bloomberg Business Week Monday through Friday. It starts at 3 p.m. Wall Street time on Bloomberg Radio and on Sirius XM Channel 119.
You can also watch our daily broadcast on YouTube. Just search Bloomberg Global News. We're simulcast on Bloomberg Originals, available at Bloomberg.com/originals, and streaming platforms including Roku, Amazon Fire TV, Samsung TV Plus, and more.
Find our Bloomberg Business Week podcast at Bloomberg.com, Apple, or wherever you get your podcasts. The latest edition of the magazine is available on newsstands now at Bloomberg.com and always on the Bloomberg Terminal. I'm Tim Stenovec.
And I'm Carol Massar. Have a good and safe weekend, everyone. Stay with us. Today's top stories and global business headlines are coming up right now.